Welcome to this Thursday edition of FreightWaves Now. I'm your host, Anthony Smith, and today is going to be the Kevin Hill and Anthony Smith Show. Coming up, we're going to do a shipper update, but first we're going to give you a carrier update brought to you by PowerFleet. Stay tuned. Welcome to your carrier update presented by PowerFleet. I'm here with Kevin Hill, the man himself. Kevin, what do you have for us today?
Today we have the carrier update powered by PowerFleet,
yes,
and presented by PowerFleet. And what we have right now is we're going to take an overview of the markets right now, basically volumes and O-Tri. So we have outbound tender volumes in blue here. They're coming down off their peak, as well as tender rejections. So it's still a pretty healthy 16.13%, and we're still well above our normal levels, but these are coming down. Most of the country is now in shut-in place or safety at home type of situations. I think over 3/4 of the population. So it's to be expected on this.
And a lot of the drive from some of that volume came from what, consumer products, right? A lot of that panic buying brought up.
Basically consumer essentials, those staples, and those are still moving pretty strongly. You have industrials and productions, and we'll get back over to that in the shipper update when we talk about initial jobless claims that came in this morning. But if we look at the outbound tender market share, this is a percent of share that each market owns. You see Atlanta's popping a little bit. So you see a lot of green on here intermittently. Dallas is a little bit low, counterbalanced by Fort Worth there. So you see the kind of the same thing in Ontario, which is up, but LAX is down, kind of those neighboring markets. But here, Charlotte, North Carolina is an interesting market. It's up 7.9% in their market share.
That's interesting. You're seeing a lot more focused in on some of the neighboring cities than previously, right? So it's like a lot more focused in on our specific areas.
Specific areas, right? So you have these neighborings that one's up, one's down on market share. So it kind of balances out a little bit. Everyone's still kind of adjusting to the lockdowns, safety, sheltering in place. But in Charlotte, North Carolina, it's still a very good market over here. You have basically freight volumes are peaked over here about a week ago, and they're bouncing up a little bit this week as well. The rejections are coming down a bit, but they're still 12.5% roughly. So that gives a very good balanced market. So if you're running to the southeast, Atlanta was up as well, North Carolina, Charlotte. So it's still pretty healthy down here in the south, and it's a good market to go after.
So a lot of opportunities. It's just really pinpointing that specific city, and something we can really pinpoint with sonar, of course, but lately it seems like we've seen, like you said, a lot of decline in some of the volumes, but still at record levels.
Still at record level, well above record levels, right? If we go back over here to the graph again, we're coming down, but we're still well above where we should be right now compared to March and early April of 2019. So still a strong market, still a lot of emergency supplies, consumer staples that are moving here and there. And so if we go back here, we see this again. We see basically we see a lot of green in here. So market volumes are coming up. OTVI is coming up as well. So those tender volumes, and it's a declining market, but there's a lot of good markets in here to hit your spots. So you have to be really aware of that.
Yeah, with all this green, what can we expect with rates for carriers?
Rates are probably going to be a little stable right now, but on the downtrend, we do the DHL supply chain index as well, and we've seen a huge ramp up in that, but they're coming down as well. But
so carriers really have to lock in some of those rates now, because it's not going to be like this forever, right? This is not going to be a sustainable.
It isn't, and we know, it's basically unemployment, jobless claims are spiking, and we have, I think 3/4 of the population are ordered, shelter in place, but about 97% is under some kind of other order to encourage to stay at home. So most of Americans are staying home right now through the pandemic, and we're seeing just crazy volatility in the market.
A lot of volatility indeed. Kevin Hill, thank you so much. That's going to do it for this carrier update. Thank you so much for tuning in. Be sure to tune in tomorrow for our next edition of the carrier update. Back with Zach Strickland.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your shipper update. I'm here back again with Kevin Hill, the man himself. We're going to get started with the biggest headline story. Kevin, jobless claims added once again.
It is the biggest story. There's no way to say otherwise. I mean, we went up 3.3 million last week, and this week was
6.6, I believe.
6.6, and those are initial jobless claims. I mean, those don't roll over. Those are new people hitting unemployment benefits.
Right, and last week it shattered the record, right? I think the next highest number was around 695,000. That was in 1982, and now we see that hit 3.2 million, 3.3 million, and now we hit yet another high of 6.6 million the following week. So it essentially doubled down.
It doubled down. That's 10 times higher than it was in 1982.
Right.
And I think in 2009, at the height of the Great Recession, I mean, it took months to get to that number on both of those previous recessions. And we are now at 10 times that.
Right.
10 times.
Unprecedented territory, and that only talks to like the volume of all these initial jobless claims coming in. That's really going to overload systems, of course. It's really going to be hitting Americans. I think some on of course, the consumer-facing sides. We're looking at retail. We're looking at hospitality, restaurant services. All those individuals are really going to be hit hard initially as we see those closures for all those businesses throughout the country.
I know, right? And then you talk about industrial and manufacturing. I think we have some PMI numbers. Right.
We just had the PMI come in. I have this here. The PMI number is in the orange, so we just had it. It got in at 49.8. I'm sorry, 49.1. So a slight decline. Many anticipated being much more lower in the next month's iteration, but still below that 50 threshold. So indicative of contraction overall.
Contractional. Do you think some of that is because of the surveys done earlier in the month to get the data to interpret and analyze to get to hit late March?
Definitely. I think there's a few things. Definitely the data being hit a little bit early on in the month. I think there's also an aspect of different components of it. So of course we saw, I think, some of the biggest contraction in the new orders component, which is very telling because new orders is indicative of production to come online and a lot of activity down the line. And so we're seeing that's no more. There's diminishing backlogs, there's diminishing new orders, there's diminishing production. But I believe some of the other components were a little bit high. I think I want to say it was the weights on orders coming in. So those things kind of fluctuate some of the overall index number. But what we can see is that there was just really decline widespread throughout much of the index, and I think much of the industry is expecting further declines in the coming months.
Yeah, I think in April's numbers and most of the survey data, like the PMI and others of the Fed data, it hit so quickly in the middle of March, you know, that it just snapped. The economy just snapped. So the data, especially coming out for the March kind of, especially surveys, because you have to do those surveys so early in the month, that we probably won't see the real effect in that survey data until the May numbers come out.
That's exactly right. And one of the things that we can kind of always tie it back to is going to be flatbed. So when we're looking at a lot of those industrial production, we're looking at manufacturing, goods like that, capital goods, it's going to have an impact for flatbed construction or flatbed equipment types, because that's what really hauls a lot of these goods. And that's even, we're starting to see some decline there, and that's telling because there's been a lot of volatility, although flatbed has not spiked to levels that we saw in other equipment types like reefer and dry van.
And then you take the oil and gas market, and the troubles in the oil field, and that's just going to depress that flatbed activity even further.
Right. So when we're looking at, of course, this is going to give us an up-to-date outlook, but for a little bit more up-to-date, always look at some of the regional Fed index data. So just for an example here, I have the Dallas Fed index here in yellow, and this really shows the overall outlook or business outlook for when we're looking at regional data for manufacturers. And so when we're looking at the regional data set for the Dallas or Texas area, we see that there was a sharp decline, another unprecedented decline from the positives all the way down into the negative 63.9. Also, that's going to take a bit of a toll on volumes coming out, especially as we see throughout some of the manufacturers.
And I guess a lot of that data, it incorporates the Eagle and Permian basins.
Right.
They're west of Dallas, right?
Right. Yeah. So again, as some of the data gets released, survey data, some of it can be out of date, but some of it can be really good and up to date and really more pinpointed to certain regions. And so those are going to be the kind of data sets that we're going to keep monitoring here. And of course, paired with our truckload data set to really kind of see that near real-time effects of what's really happening in the market. Awesome. Thank you so much for tuning in. That's going to do for this shipper update, and that's also going to do for this edition of FreightWaves Now. We're always streaming around the clock. We have the hardest working media team in the business, so be sure to check out our streaming platform on all your favorite platforms like Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.